Welcome back, everyone. Michael here with Offshore Citizen. Today I'm going to answer a question that comes up quite frequently from foreigners. In fact, even lawyers and accountants ask me this question, including, interestingly, US accountants. So what we're going to be discussing is, say you are a foreign owner of a US LLC. Are you subject to taxes in the US? Now, in addition to that, for all of you who are not from, or who are Americans, or from somewhere else, I'm also going to cover how the principles that are covered here apply to other types of structures in other parts of the world, because we're going to get into some definitions which can be quite important. So if you want to save taxes, this could be a good point for you. And if you're unclear on this point, it will hopefully clear some things up, because it is fairly important in a variety of different areas when we're kind of assessing the taxability of a structure. So we're going to dive into that. If you haven't already, please hit the subscribe button, hit the notification bell, make sure you don't miss out on any of our future videos. If you don't know, we try and produce great content for you every single day. If you're interested at all in these subjects of how to pay the lowest legal amount of tax possible, reduce your global tax burden, protect your assets, if you're interested in forming offshore companies, opening offshore bank accounts, if you're interested in getting residencies or citizenships, any citizenship by investment programs, including unofficial citizenship by investment programs, please reach out to me. You can book a call, clarity.fm/Michael Rosmer. There's a link in the description below. Or you can check out our websites, offshorecitizen.net and offshorecapitalist.com, and you can send us a message there. Okay, let's dive into this. All right, so just for a little quick piece of background, in the US, there are a variety of different companies. The most important two that would matter for this conversation, and I've done a bunch of videos on different corporate forms, so you can feel free to go and check out those videos, but is C Corps and LLCs, okay? Now, in particular, when we're referring to an LLC, we're referring to typically a single member LLC, which is referred to as what's called a disregarded entity, okay? And I'll get into in a second how that's relevant. First, let's talk about C Corps. If you have a C Corp is a separate legal person under the tax code, and so it is subject to tax like a resident of the country. So a C Corp is always taxable in the US. In fact, even tax treaties are not going to get you around that residency provision. You're screwed there, okay? So hence, as a foreigner, you may not want to form a C Corp. There's some cases where a C Corp is the best solution for you, but oftentimes it's not, okay? Now, this is similar to if you're from somewhere else, which might include the US. Maybe you want to look at a UK LLP, you might look at an LLC in some other countries. There's not that many countries that have them, but some do. You might look at something like a Canadian LP or LLP, et cetera, et cetera. There's in Netherlands, there's something called the CVBV structure that used to be kind of common in big corporations, international tax planning. So anyway, all of these kind of follow some similar principles as we're going to talk about here. In addition to that, what we're going to discuss plays into territorial tax. So if you're looking at, say, Malaysia has a territorial tax system, Hong Kong has a territorial tax system, Panama has a territorial tax system, Costa Rica sort of, Paraguay, Uruguay, a variety of different countries, this might become relevant, okay? Now, let's talk about the LLC side. So when you have an LLC, which is a disregarded entity, what this means is that for US tax purposes, it does not exist. It's similar to being a sole trader. You might be familiar with that in your home country, a sole trader or sole proprietor, which basically means that the income of the business and your income are the same, okay? So it's not like there's a separate tax return for your business and you. No, it's all the same. Like whatever you earn, that's your income, you pay taxes on that income, as opposed to having a company which earns income, pays tax on there, and then pays a dividend to you, okay? So this separation is really important. So an LLC is not separate, and this is going to play into our questions, okay? So let's look at the simple scenarios that come up. Let's say that I am an online drop shipper, okay? So I have products and I sell them around the world, okay? Let's say that for kind of the sake of simplicity, I am based in Cyprus, okay? We'll just use Cyprus as an example. All right, so I'm based in Cyprus. I'm shipping products all over, but I'm operating all through the web and my operations are in Cyprus, okay? Now, if I set up a C Corp in the US, it's very clear that that company is taxable, okay? Very clear. On the flip side, if I am not operating through a US company, it's typically pretty clear that I'm not taxable in the US, right? Where people enter this point of confusion is, okay, I have this US LLC, which it doesn't exist for US tax purposes, but it's still a registered entity in the US. Now am I subject to taxes in the US, okay? And so we're gonna go through the way that you figure this out and how it works. Then I'm gonna apply it to some other scenarios that, again, might be useful to you. All right, so what a lot of people, if you kind of look into it, will say is they'll say, hey, listen, well, you're still taxable for business generated in the US. Or actually, maybe let's separate this out first of all. So if you are, like, because there's no separate person, right, your income and the income of the LLC are going to be one and the same, right? So in theory, the tax treatment that you have not without the LLC should not change with the LLC. It should be identical, right? Because there's no separate legal person. There's some additional filings. You have to file 5472 each year, things like this, but that doesn't change your tax obligations, okay? So there's a little bit of a thing that happens here which I think is worth noting, which is sometimes people actually do have tax liabilities in another country, but because they're not in that country, it's difficult to enforce, it's difficult to pay attention to, it's just not on the radar. And so, hey, listen, you might be getting away with it, it doesn't mean that it's legal. And by wrapping a legal entity there, even if that legal entity doesn't change your tax status, that legal entity could put you under the magnifying glass so that now you're being seen, right? So a great example of this, I think, is with sales tax, right? If you look at, say, EU VAT, generally speaking, whether you have a company in the EU or not does not change the VAT obligations, okay? Let's say you have supply of electronic services, right? This is based on place of supply rules, and the place of supply is where the customer belongs, not where the business belongs. So say a US company selling electronic services to a client in the EU is still supposed to charge VAT, even though they're not based in the EU, right? However, they very often can get away without doing that because of the fact that how does the EU know, right? The EU doesn't know. If the EU does know, they don't have jurisdiction in, let's say, the US in this example, so it's hard to go after them. And there's no incentive for the customer who is getting away without paying VAT to report the person, so what's going to happen there, right? This all changes if, say, you go and form a company in Cyprus, right? Because now you have an EU entity, right? So now when you file your financials at the end of the year, they're going to see there was a bunch of these transactions and say, hang on, are you registered for VAT? Are you charging VAT, etc.? And so suddenly, it's not that your VAT obligations changed. What's changed is that the visibility of those obligations has changed. So the question then becomes, all right, have the obligations themselves changed by having a US LLC, or has the visibility changed, or neither? Okay? All right, so let's dive into this. If you were a foreigner, okay, so a non-resident alien of the US, and so who does this not apply to? This does not apply to US citizens, right? This does not apply to US green card holders. This does not apply to individuals who meet the substantial presence test that makes them a US tax resident, okay? If you're a US tax resident, everything that I'm about to say goes out the window because you're taxable on your worldwide income as a US tax resident, okay? But let's say that you're a foreigner. Okay, so if you're a foreigner and you're in this situation, you are still taxable on any US source income, or we're going to start getting into a bunch of different definitions here, but income which is effectively connected with the conduct of US trade or business. Okay, so we're going to go through those definitions in just a second. But so where are some examples of this? The example that I always give you is, hey, listen, if you buy a property or you have a retail store in downtown Manhattan, you're taxable on that income, regardless of whether you're a foreigner or not. And this would be true also if it was held in a US LLC, right? It's going to be taxable regardless. It's clearly US income, all right? Where it starts to get trickier is where we ask, okay, well, what makes certain income US income, right? It's really clear if the property is there. There's certain definitions of income like royalties, interest, dividends. These things tend to be fairly clear. And so let's dive into that. So first of all, if you want to study this subject, the IRS has a helpful little guide. You can Google US source income, and they have a little chart that goes through different types of income and describing where the income is sourced based on those rules. Okay, so that's the first thing that is a useful reference point for you. Now, as much as this is, helpful, there are certain cases where it's kind of unclear, okay? So if we say, okay, well, it's unclear, then what do we have to look at next? The next thing that we can look at, if possible, is where there are tax treaties, okay? So if there's a tax treaty, what you will notice is there's kind of a few areas that tax treaties can be useful to you. One is the residency clause, the second is the withholding tax rate, but the third can be the permanent establishment clause, okay? So this is typically Article 5 in tax treaties, not necessarily, but typically Article 5. And so you can go and you can check. The definition is almost always pretty much the same, okay? And so what this article will say is that the foreign state, right? So let's say that I'm in Cyprus. This is part of why I used Cyprus as an example, because there's a Cyprus-US tax treaty. So I'm in Cyprus and I'm busy doing business, I'm selling to the US, right? So what it will say is, hey, listen, if you have a resident of Cyprus who is doing business with the US cannot tax that resident of Cyprus except insofar as the resident of Cyprus has a permanent establishment in the US and only on the income attributable to that permanent establishment. Okay, that's basically what the rule, and then it goes through defining, what is a permanent establishment, which is a pretty broad definition, actually. I have another video on permanent establishments if you want to go check that out, okay? All right, so that's fairly clear. So in other words, if you have a US LLC and you're a foreigner and you don't have a permanent establishment in the US, again, the US LLC doesn't exist for US tax purposes, so it's only you who exists for tax purposes. And so you have that treaty protection, right? So if you have that treaty protection, then are you subject to tax? No, you're not subject to tax unless you have, like I said, this rent, royalties, interest, or you're operating via a permanent establishment. What if you're in a country that doesn't have a tax treaty with the US, right? So use an example, say you're sitting in United Arab Emirates, UAE, right? And it might make a lot of sense if you're there. You say, hey, listen, I want to access US payment processing. My decline rates are going to be lower if that's the case. Maybe I can get better rates on charging people. Maybe I'm going to have access to different processors, different banking, etc. So I want to have a US LLC so that I can do that to sell to my US clients. Okay. Now are you taxable in there? So this is where we have to dive into the case law and the definitions around what we call effectively connected income with conduct of US trade or business. So in other words, you need two standards to be met here. First of all, you need the income to be what we call effectively connected income, okay? The second is you need to have what's called US trade or business, okay? Simplifying this down for you, basically, if you do not have people in the US, okay, meaning like employees or like full-time or like major contractors, what we would sometimes refer to as dependent agents, okay? Dependent agent is actually a term from the tax treaty, but let's just separate that out for now. So basically, if you don't have somebody who's effectively a dependent agent in the US, simple example, your employee is sitting on US soil, or you are sitting on US soil, doing the work, whether that's sales, whether that is, supplying the services, etc., then you should typically not be taxable in the US, okay? That's basically what it means. Now, why I want to cover this in terms of some other cases is, in general, like if you look at Malaysian tax law, for example, Malaysia will say, hey, we only tax Malaysian source income, but Malaysian source income is not defined in statute in Malaysia. So it becomes a little bit of a challenging point to figure out, well, what the heck does that mean, right? Likewise, you can look at Hong Kong. Now, Hong Kong is a little bit better. They have something called the operations test, which is effectively the same thing, right? Hey, listen, your operations are taking place in Hong Kong, therefore you're taxable in Hong Kong, right? Likewise, you can go and you can look at some other places. So this is a common fallacy I would hear from people. I lived for a little while in Costa Rica, and I would talk to Costa Ricans who would say, oh, hey, my customers are outside of Costa Rica, so I'm not taxable in Costa Rica. That's not true. Costa Rica has a territorial tax system, but they do tax based on, like if you're sitting there working in Costa Rica, your operations are in Costa Rica, they're considering you taxable in Costa Rica. Panama is like a little bit more lenient, but still kind of you go down a similar path. So in general, this concept is going to apply. Similar if we're going to talk about something like a UK LLP, right? If we're talking about a UK LLP, it's a flow-through entity, right? So for some cases, it might be better to say, hey, listen, I can have that company, and rather than, but I don't have any business in UK, so potentially I can pay no tax on that UK company. Cool, great. That's in UK, by the way. Doesn't mean you're not taxable in the other country that you're in. Just like for the US LLC, if you are, let's say, sitting in Australia, right? Great, you don't have the US tax, but you have the Australian tax, right? So keep these things in mind. Anyway, bottom line of all this, very, very important to understand the definition of what it means to do business in a country and to have, say, in this case, US income, right? US income is typically not determined by where your customers are. That's like the big fallacy that I hear from people. And they get it wrong both ways. They'll say, well, I don't have any customers in the US. Doesn't matter if your operations are in the US typically. On the other hand, somebody will say, oh yeah, but I'm selling to Americans. Doesn't that mean that I have US business? No, you do not. Provided these certain things aren't true, you don't have a permanent establishment, you don't have people who are on the ground working for you, etc., you will typically not be subject to tax in the US for a non-resident company or a non-resident individual. So I hope that helps, clarifies it a little bit. Obviously, it's something that's fairly complex. I tried to simplify it down here. You can kind of dive into the specific cases that cover it, but that should summarize it for you. And so what it means is that for certain people, it can be really effective to use a US LLC as a vehicle. So we often work with clients on that. And on the flip side, it can be really good if you're in a situation where you can take advantage of some other countries, such as potentially Hong Kong. However, what it also means is you have to be super careful, not just where you're registering your company, but where your operations are, because where your operations are can often be much more important than where the company is formed. So anyway, if you want help with that, again, please reach out to me. You can book a call, clarity.fm/Michael Rosmer, link in the description below. If you haven't already, smash the subscribe button, nail the notification bell, and if you liked the video, please give it a thumbs up. If you didn't like it, please tell me why in the comments. Would be happy to have some feedback. And if you're interested at all, like I said, in any of these topics, please reach out to us, check out our websites, and I'm going to look forward to seeing you guys on the next video.